Well, I know we always start with the futures, but today I'm going to want to start with, this is called anchored VWAP. It's right here on tradingview.com. So we generally, I use VWAP on a regular, on a daily basis. So what VWAP gives is it's a volume weighted average price. So if you look at this one, this is the low of 2020. So that's the low of, that's where I anchored it. So I got this line. So that's the average price paid by each person who bought over this period. And these really work really well. I used to follow this guy, Brian Shannon, a long time, very long time ago. And I mean, he actually posts his videos every Friday. He just covers what happened in the market. It's in the YouTube channel. I don't really follow him anymore because it's very basic. But if you guys are starting out, he's probably a very good guy to follow. So now that price is around $382. Okay. So if this is broken, okay, average guy who bought into this starting to lose money. So generally this is where you get really good support. A lot of people use this. Many institutions use this. And now let's look at QQQ. So that's exactly what I've used again. From the low of 2020, I used a couple of them. That's the low, and I also used the next higher low. So look where it stopped. That's the higher low, and that's the low. So even though I can't see a lot of significance right here, but this tells you that most of the people right here, or I'm sorry, not most, the average guy is going break even right now. So there are plenty of losers when the market hit here. Obviously, there will be plenty of winners too, but there are plenty of losers too when the market hits this range. And I generally check this in different ways. One of the simplest way is to check from the swing lows. So let's say we do this here, right? So by Friday, the average investor during this bounce started losing money. So this is one of the easiest ways to figure out whether the market is trending up or trending down. Now, it would have been so much better for the market if it would have bounced from here. Let's check from here. Let me get rid of this. We have too many now. So we opened below the VWAP, anchored VWAP of today. So I mean, this tells you that people who, the average investor during this period, they started losing money. In fact, an average investor since October in NASDAQ, they are negative right now. And this gives you a very good idea of how bad the market is. Yeah, still negative. Now they're not negative yet. So what's that low? 2020 July. So I mean, check it out. It's a very good tool, because it tells you certain information which is hard to understand other than by tool like this. Generally, what you have is a VWAP, for In Thinkorswim, I do have VWAP all the time. Let me go back to Thinkorswim. But it cannot anchor to a single point. Studies. Actually, I do have anchored VWAP, but I have to put in the date. You cannot just click on it. So that's your regular VWAP. And I have this in all my charts on a daily. So let's today, what we have seen is for QQQ. Let me get rid of the overnight. And generally, it either acts as a resistance or a support. What's the other one? Is that the 20-day? Yeah. No, that's, hold on, guys. Yeah, that's the VWAP. Oh, moving average 8. Okay, we don't need that. I generally have this on my charts the whole day for each and every stock. Look at that. It moved lower, came back to VWAP, tried to stay above, failed, went out, failed again. And this actually tells you what's happening over the day time frame, whether the market is doing better or worse based on just this one line. So this kind of helps. Any questions on this? Let me go back to trading view. Well, I mean, if you have any questions, let me know. But this is a very good tool I wanted to talk about. And what else do I have? Yeah, let's come back to. Yeah, this is VWAP too. Yeah, all right. Let's start. All right. Let's go through this right now. Did I lose all of them? Give me a second, guys. Yeah. All right. Can you guys see the Thinkorswim or no?
Yeah, we can see.
All right. Thank you. So, all right. So what I was saying this morning is that even on Friday is that if we lose the 50-day, and which we did, we lost 50-day on NASDAQ on Friday, which actually closed below the 50-day. I thought it closed below 50-day. It's NDX. Yeah, NDX. It closed. NDX is obviously more important because that's the index. Index is always, index numbers are more important than the futures. So closing below 50 is why I bought those puts at the end of the day. I mean, it barely closed below 50, and I expect that this gap should be closed because we have two gaps right now. But if it gaps down tomorrow, then we might have a nice rally, because that would be a serial gap number 3. That's a lot for for the indices. So yeah, as I was saying, yeah, Nasdaq was closed below 50, and today SPX closed below 50, and there is a higher probability that it either comes. Well, we do have these fibs. The next support is at 43.14, and if S&P comes all the way here, this is what I was talking about when I was saying the inverted head and shoulders. That's the head, that's the shoulder, and we could probably get it all the way here. I mean, we already had a 1-2, not in this one, but for NASDAQ, all the 5 days were down. So this could come all the way down here, and we could have an inverted head and shoulders. While that's happening, NASDAQ will probably, come down and test this lows, unless we get an inverted head and shoulders here and NASDAQ can break above this level. And there is one coincidence, and generally these all coincide, as if it's been pre-written or something. See, Google has a very good support here. It bounced off of this support 3 times. It could bounce off of here. At the same time, NASDAQ could bounce off of this support. Okay. And what else? Microsoft is at 270. Microsoft could come all the way down to 270 and bounce off of. So this could all happen in this week. It could come to 270 if things get really bad. This is something I'm expecting, and all of these supports can happen on the same day. If that happens, we will definitely see a bounce. Yes, so as I said, the 61%, 30. Let's look at this. Let's look at this fib. So we have a fib here, and we also have a support right there. So around 4,300, 4,325 is where you have a good support. And if it comes here and bounces, that could also be a kind of a head and shoulders for ES inverted. So it will come here and push back higher. I don't see that happening so far, the way market has been moving. Generally, when you have a move like this, I mean, this was a really, really big move. It should have came to 50-day and started bouncing. And during this period, semis are the ones that are doing worse. It has already retraced this 100%. So I mentioned about this in the last webinar, that we could have a head and a shoulder, but that's broken now. So, and stocks like Nvidia are looking really, really bad. I mean, if these supports are broken, then market could do a much bigger leg lower. So that's where we are right now. And I also wanted to talk about the portfolio risk. Right now, I have like 12% in stocks in the trading account. So that's about, even if I lose an average of 8 to 10%, I'll probably lose about 1.2%. I mean, I'm always thinking about my worst case scenario. So my worst case scenario would be losing about 1.2% here, and I have a few in my options. And those, let's say if there is a crash, always think about, if there is a crash, how much money are you going to lose? And if you start thinking about the worst case scenarios, that's when you can make much better decisions, because you know exactly how much you could lose. So anyways, talking about the Nvidia, this is bad. I mean, generally a strong stock would not go down like this at all. It would generally bounce and then go down. But what we are seeing is something dramatically different. And if this 208 is broken, as I said, it could go all the way down to that 162 level. And we will see a lot of investors come in as soon as it breaks below 173 or so, because a stock like Nvidia, when it loses 50% of its value, we will see a lot of investors showing interest right away. Russell has been horrible, that has now that's the oversupply that we have, that the overhead supply that we have, and it went over there. I thought it was this. I also mentioned this last time. I thought as soon as it's going inside of this, that's a fake out again. Just like a fake out here, it went inside as if everything was fine, and then it started. This is a weekly chart. So on a daily chart, if you look at it, this day was amazing. I thought everything was turning bullish because you had this huge consolidation and it broke out, and from next day it started moving lower. So I don't see any bullish signs at all right now. So that's where Russell is, and if it breaks the lows of 1923, yeah, I don't know how far this is going to go. Obviously, inflation would affect more on the domestic companies than anybody else, because they cannot push those price overs to their customers. They are mostly small businesses. Crude is at a very interesting point right now. This is the hedge pattern. If you see, this is the hedge pattern we have been talking about right here, even in ES, right here. This hedge pattern always, you get generally you would short below this level, okay? And anytime you short in a hedge pattern, when it breaks this low, generally doesn't work. It traps a lot of people here, and it does a really big move higher. And this I've seen this happen too many times, and there are a lot of people who follow this. And even here, this is a hedge pattern and a big bounce. So the same thing could be working out right here. So we could probably get a bounce higher. I think the inflation numbers, is it tomorrow or day after tomorrow? Tomorrow 15th. No. Hold on. Inflation.
Yeah, I think tomorrow.
Yeah. That could also be that could also be one of the reasons why we got the sell-off today with 10-year moving higher. We were just talking over the weekend, and I think somewhere around October 15th, this is where I locked my rate for our house that I bought. I mean, it would have been a disaster right now. I mean, and I was listening to one of the rants from Josh Brown. He's saying about 2 million people cannot afford to buy a house right now in this country, new homeowners. So yeah, I mean, this is gonna kill the housing market. The way it's moving higher today, as I posted, it's 5.25%, highest since 2009. That's over a decade. That's 13 years, right? So what else do we have? The gold. Gold is kind of looking really good. I mean, looks like that's the only safe haven right now. The only problem with the gold is this: it does this all the time. It goes up, comes back down, and the next day it goes up. So you have to be patient. That's why I didn't do anything with GDX options today. I'm gonna wait for it. unless it breaks this level, not that level. I think it should break this level for me to be concerned. We also have this level to look for, this trend line, I mean. Okay, I have been reading a lot about VIX recently, how big funds or institutions buy based on VIX. Looks like a lot of people would start buying at 36. So 20 seems to be the average VIX over the last 10 years or so. And 28 is the first standard deviation and 36 is the second standard deviation. So whenever VIX hits 36, looks like a lot of people get into the market. That's a lot of panic. I mean, I was reading one of the newsletters, a few weeks ago, and he says that's one of the reasons why 36 is so important. Well, I mean, if it breaks 36, that's when we should be really be worried. But if it breaks 36, and he mentioned a few things how to get invested once VIX breaks 36, and it makes a lot of sense. And we will probably have this conversation another time when VIX hits that 36. Let's go through NASDAQ composite. Oh, by the way, the Market Smith has turned its, I think this was last week, into, I forgot to post this, their current outlook into uptrend under pressure. So, so you know, are you guys able to see Market Smith here?
Yes.
All right, thank you. So, so this is where we are right now, and then also with NASDAQ composite, that 13095, same as S&P and NASDAQ 100. This is probably possible head and shoulders pattern. So we'll see if that happens or not. And I was saying on this day when this was broken, and this was left shoulder, right shoulder, and this is the head, I was saying that as soon as this was broken, we don't have to worry about this. But it went direct right to that place, and it's breaking down again. So that is still in effect. So we have two levels. One is 13,095 and the 12,552. Looks like we also have a big fib here. That's the first fib. And the next level would be 11,421. We'll see when the market goes there. Well, that's all I have, guys. Unless you guys, I mean, I went through most of the, actually, you know what? Let's look at the VWAP for all the sectors. This is a very nice tool to play around with and see what's happening out there. Sorry. Let's assume that's the low. So this low has been taken out. Yeah, retail doesn't look like very good. No, this actually is not the right one. So just remember that 69 level so far seems to be the VWAP for the 2020 low. So healthcare, I was looking at healthcare already, and it bounced off of VWAP of that October 2020, and I didn't even look further. That's around 118. I mean, healthcare has been doing really well, and looks like a lot of people who couldn't or do not want to invest in either staples or utilities, they do invest in healthcare as a defensive sector. So that could be one of the reasons why healthcare has been doing really well. Utilities has been doing great. That's a steep move for utilities. Same with staples. That's the technology. And as I said, this has already tested the VWAP for the 2020 lows. This should be same as, oh, actually it did. For QQQ it did, but not for this one. Industrials. I would check this out and, constantly look, and this is free. The trading view is free if you don't mind the ads. I mean, I do have a subscription, but watch for these levels and see how the market will react for these lows, or the VWAP for these lows. That's financial. Financials did better today. It could also be because of, look at that, 1, 2, 3 tests and a bounce. So yeah, financials actually, oh, they went negative by the end of the day. This morning they were all green, and we have a bunch of financial earnings this week and next week. I think we have JP Morgan this week. I think Ravi posted all the earnings dates in the group. Energy has been doing really well. No point in even looking at it. Materials the same, but it did not break out yet. If you look at this, it hasn't broken out of that range yet. Yep. When is this? So since May, so almost a year, 11 months. It's been moving sideways. And that's down over 34 or 35%. I think that's home builders. And yeah, you can imagine with the current rates, that makes a lot of sense. And for XSP, no, not for ITB, I think it's been testing the previous highs. That's actually the breakout. So when you said that's the 2021, yep. XPI, I mean, I played this one and I was expecting it to do much better than this. If the market were to do good for this one, I thought this would, I think I have a better chart in Thinkorswim. Give me a second. That seemed like it was bottoming well, and we just played for 2 days. I think that's it. And if it were to break this level, yeah, I mean, whenever you have a steep move like this, it's easier to go all the way back to 115. But again, market is tanking, and XPI is doing horrible right now. It's probably one of the worst sectors right now, or even IPB. All right, let me go back. BGT, that's the technology vanguard. I guess that's it. We have covered everything else. Oh, mid cap. Yeah, mid cap has been, well, again, with the market, the way generally mid cap does tell you a better picture than a large cap regarding the market. How long it's been down? 1, 2, 6, 9 days, 8 or 9 days. That's IWM. And if IWM breaks this level, there is a higher probability these moves will be taken out really fast, and it could come all the way down to 164. BRCC, yep, will do. All right. Well, yeah, let me post any questions you have in the chat, and I'll look at the tickers. Well, I saw BRCC, and the only problem with getting into a stock like this when you see these big candles, I mean, the way market is, I mean, this is a huge move. I have seen this, IPO base and a breakout, and we made money on this one. And the next day when it came down, it didn't make any sense to stay in there. But yes, the only problem for stocks like this is to get in with a small risk is very hard. You can get in somewhere here, but now, that's a 12% moves or 10% moves. I generally stay away from them, because if you have 8% stop, you will be wiped out right away. So, but yes, this is on my focus list. That's the top of my focus list. However, what happens is when it moves like this, it will again make another base. Okay, when it makes another base, you will get another chance to get in again, and that base will be something like this with really small candles. And when it consolidates and breaks out higher, that's when you get in. But this is not a place to be in right now, at least not for me, with a smaller risk. Any other? I think I covered everything that I wanted to.